And one of the things that usually gets people really well engaged is the market update. So I wanted to share with you what that market update looks like. So we're going to do a review of what happened in 2024 versus 2023. And we'll also do a little bit of a forecast, which is probably one of my favorite things, as we look forward to see what's going to be happening in the market over the next several months through 2025. And one of the things that we're watching probably really closely right now, you guys are probably, any of you guys who are buying properties, or even those of you guys who are selling properties, are probably watching those interest rates. So we've seen the interest rates go up, obviously summer 2022, and a lot of people said after that, well, when interest rates go down? Well, here we are in February of 2025, and we're still waiting for that magical moment to happen. And in fact, with the new administration, combined with the Fed Chairman Powell says, hey, it looks like you're going to spend maybe a little bit more money than you have. I don't know if that's, and that might create some inflation, but at the same time, I don't know if they're looking at the efforts that some of the folks are doing to reduce expenses. So for right now, the forecast for 2025 is for interest rates to be mostly flat. They may go down 0.5%. Those are the Fed funds rate. We'll probably see that go down, but we haven't seen the mortgage rates go down in the lockstep with the Fed like we've seen in the past for several reasons. But right now, one of the big things we are watching is that interest rate. But this chart that I have on the screen right here, and I know it's a little bit of an eye chart, and forgive me for that, but what you'll see is that red line is housing prices. And the blue line, once it comes back up on the screen, that blue line is interest rates. So what do you notice about housing prices versus interest rates? This is the interactive part. I can hear you breathing. What do you notice about the correlation between those two things? Who are my statistics people? You don't even have to be a statistician to read this. What do you see? Some people will say an inverse correlation, but if you look at it pretty closely, as interest rates go up, housing prices go up or they're flat. As interest rates go down, housing prices go up, right? And you just kind of see this, you see it kind of going up pretty steadily over time. So a lot of people think interest rates go up. Have we seen the housing prices drop substantially? Even though we've doubled interest rates. Have we seen sales drop substantially? Yes, we've seen sales drop substantially. But because so many people have those loans that Phil was talking about, those 2, 3, and 4% interest rate loans, what are they doing? Are they in a big hurry to sell? No, they're wearing these beautiful golden handcuffs. Those golden handcuffs are 2, 3, and 4% interest rate mortgages. As I say that, I'm super curious to know how many of you guys are wearing those golden handcuffs. How many of you guys have a 2, 3, or 4% interest rate mortgage? This is the interactive part. It's really okay. I knew it was going to be you. I knew it was going to be you. You got one too? You're going to be in that house forever. Enjoy it, right? So your alternative is to, so some people will use it as a rental property at some point, depending on the price point, right? Other people will say, that doesn't work for me, but honey, let's go ahead and blow out the kitchen, right? Let's go ahead and redo the master bathroom. Let's go ahead and make my man cave or my she shed or whatever it may be. So if you've got one of those really low interest rate mortgages, which about 70% of the people out there who have mortgages have interest rates that are at 4% or below. But we're not seeing the big drop I think a lot of people expected, like, oh, we'll see a 10, 20, 30% drop with these interest rates. We haven't seen that. We've just seen people stay still so they don't have to, so they can kind of look away and ignore the drop for right now. So as we look at what happened last month, and I've got the 4 major cities here in Texas, as we look at what happened next month, and sorry, this changes screens every so often. So there we go. All right. So this over here is January of 2025 versus January of 2024. What do you see in the number of sales? They're all up. What do you see in the average prices? Everything's up except for Austin and San Antonio. Austin had the biggest run up, and now they're having a little bit of the biggest run down. And then if you look at 2024 versus 2023, All the sales figures are up. They're barely up. They're more or less flat, but flat is the new up after you double interest rates, right? And then if you look at the prices, we saw the same thing with prices. They're up, in the 1 to 2% range for all of Texas, Houston, and DFW, but they were down in the 1 to 2% range in San Antonio and in Austin. So those markets are suffering a little bit more just because they had a bigger run up than some of the other markets. And I'll go ahead and break down some of the more details. So who are my left brain analytical people in the room? Like to get into the numbers? Really, just me. I think that's actually true because I only see one person pulling out their camera. Normally at this time, it's like everyone's taking a snapshot so they can kind of zoom in and study it a little bit more. But what we see is last year overall for Texas, the top part is January 2025 versus January 2024. The bottom part compares 2020 versus 2021, and then all the way through 2023 versus 2024 on this far right side. So what you'll notice again is you'll see those closed sales increasing, the average price up, and as well as the median price up. The pending sales are up a little bit versus last year, and we do have significantly more want to. Most people who have a house right now, they're like, should I sell it? Should I keep it? Most people are trying to keep it as long as they can while they ride out what kind of this flat that the market's going through right now. For the Houston market, so I'll spend a little bit more time here. The average sales price up 4.4% versus this same month last year, January versus January. Median sales price up 1.6%. And we're seeing some compression now in days on market. So for a long time through 2023 versus 2022, you started to see a lot of change in 2022's days on market versus 2023, and you saw that same kind of stretch out 2024 versus 2023. Now the numbers are getting a little bit closer, 59 days versus 61 days. At some point, depending on inventory, and right now the number of active listings is up 26%, sometimes when you see that inventory start to drop and not be up 26% year over year, that's when you see those days on market start to compress. Austin, for example, in 2022 had days on market of about less than 30 days. They had months of inventory of about 2 weeks, 14 days, versus right now, for example, the Houston market has a 4.3 month supply of inventory. Now they say that when it comes to months of inventory, that our average, right? Our average is somewhere between 6 to 6.5 months of inventory. That's our 40-year average. That's what they call market equilibrium. So anything below 6 months is seller's market. Anything above 6 months is a buyer's market. I think that data might be a little dated because we have a lot more technology now and a lot more data now than we did, for example, going back to the 80s when we were starting to collect some of this data. Did anybody buy a house in the 80s or in the 90s or like early 2000s? Anybody? Okay, so some of you guys might remember that the realtors walked around with a what? A book, paper. And that book was printed in for some of the millennials in the room, they're like, a what? A book? A book? A book? Right? So it was printed on paper. It was printed once a month. So at that time, it was hard to kind of figure out, how much inventory was needed. And you saw maybe us getting overbuilt in the 80s, specifically here in Texas. Now we've got all this technology, so we can know real time how many houses we need to build. And builders are looking at that, permits, months of inventory, et cetera. So I think that months of inventory number will shrink. Right now it's at 4.3, and I think 4.3 is more of a balanced market, and we're kind of seeing that in the prices as well. And I want to kind of go a little bit more into days on market versus months of inventory. All of you guys have heard that phrase, days on market, right? It's the amount of time it takes to sell a property. That's what you think it means. What it really means, and you ask a realtor and they'll tell you, is it's the days from when it was first active to when it was pending. After that, it usually takes another 2 weeks to 4 weeks to actually move to sold. So if you guys are trying to figure out what is going to be my holding time on my flip, because you're going to use that to figure out what is going to be my profit on my flip, you're going to want to add at least 1 month to your days on market. Okay. Now, days on market, if you hit that number, that's going to be what I'll call your best case scenario for a sale, a speed of a sale. Best case scenario. Your months of inventory is essentially what it looks like if you and your house gets picked last. So that's your worst case scenario, right? Worst case scenario. So for me, one of the things that my business coach taught me over 15 years ago, and I still, every single property that I look at today, I do a best case, worst case, and most likely case scenario. What case scenario do you think most new investors use? Best case on steroids, right? They have the highest ARV, the after repair value, right? What the property is going to sell for. They have the lowest repairs. And of course, new investors, they never go over budget. That's a lie, right? And then they expect to sell it faster than any other house that's sold ever, right? And none of that happens. And even it's really hard for it to even happen for experienced investors, right? The quote, "My renovation project came in on time and on budget," said no one ever, right? So be honest with yourself when you're looking at these. I'll go through the lease listings. So the number of lease listings were flat year over year. So we did see a lot of owners move their houses from for sale to for lease. So we actually saw a big jump in the number of property leases. We're not seeing that same jump today. I think we kind of absorbed a lot of that over the last couple of years. Lease prices are up, but again, they're kind of flattish to up. Anything kind of plus 1 or 2 or minus 1 or 2 to me is basically flat. But lease prices were flat. Up 2% year over year at 2254, and the number of new lease listings that are put on the market up 5%. Anybody here have friends or relatives in Dallas? Dallas is probably the market that's doing the best, and it's probably Houston and Dallas tied for the best results in terms of last year's results as well as in terms of January's results year over year. I'm going to skip through this one really quickly because we're in Dallas. We're in Houston tonight, so I'm going to skip past the Dallas data pretty quickly. The Austin data, I'll also put it up just in case you have friends, family, or thinking about investing in Austin. Austin's kind of suffering a little bit still. So it's so interesting to see that the months of inventory right now in Austin, 3.6 months of inventory at its low. When houses were selling, multiple offers, same day it was listed above list price, in some cases sight unseen, there was a 2-week inventory of houses for sale. Okay, so it is right now 3.6, which is what I would say kind of a normal market. But this is one of the ones you can see if you look back at the 2020 versus 2021 on the far bottom left, you'll see that the average price and increase between 2020 and 2021, 29.3% in Austin. So no one really feels sorry for Austin that they're giving back some of those wins. But that's one of the reasons why that market is a little flatter than the Houston and Dallas market. And then San Antonio, also I'll go through this one really quickly again because we're in Houston tonight, but they saw some big growth in 2020, 2022, and then started to give some of that back in 23 and 2024. And as we wrap up the something strange happened here. Let me see if I can get this back on the screen here. All right, perfect. As we wrap up the market update, I'm going to break it down into 5 different categories that I think are going to be some of the big drivers for us for 2025. So the first overall driver is the overall economy. What is our consumer confidence like? Consumer confidence basically dictates whether or not we're going to pull out our wallet and buy something, whether we feel comfortable buying stuff. Right now, we're just over 100. And they say anything above 100 is solid, so that's in the green. The unemployment rate, they say anything below 5% is basically full employment, just because people move back and forth between jobs. Right now, the Texas is at 4.2%. Job growth, we are making more jobs than we are, or creating more jobs than we're losing. The stock market, man, pardon me, it's been what feels like a bear market, 2022, 2023, 2024, 2025, and 2025 still looks very strong. Business growth cycle, where are we at? We're at 6% business growth. Housing affordability, a lot of people say that housing's not really affordable because of the higher interest rates and because of the big jump that we've seen in housing prices. So as interest rates start to go down, which I don't know that we'll see more than maybe 1 or 2 rate cuts in 2025, but as those interest rates start to go down, then we'll be a little bit more affordable when it comes to people being able to afford the monthly payment, which is what most people look at. When it comes to the housing supply, active listings, they're in yellow. So we have been increasing active listings by a lot, but I think based on the months of inventory, we're really very much at a market equilibrium. Housing permits, we're not over or under building right now. We're building the right number for the amount of demand that we have. When it comes to construction labor growth, we don't have enough contractors. And we've got some legislation changes that might result in us having even fewer contractors. So what's that going to do to the price of houses? Increase them. That's exactly right. And then when you look at housing demand, our closed sales trajectory, pending sales trajectory, they are all looking decent, right? But again, we're kind of in that up or down 1 to 2% every month. In migration, so more people are still moving to Texas than leaving Texas, but there are some wild cards out there, like what will those interest rates be, and when will those decreases come? And then we've got a lot of post-election and tax law changes. We're seeing some of those things happen very actively. We're part of 2 different wars, right? We've got, we just had a ceasefire right now in Israel, so that piece is hopefully being negotiated. And then we've got a war in the Ukraine, right? So some of these things are having some big impacts on us. And where do you think we get most of the gypsum for the sheetrock that we use? So is China, so Canada, you know, we get a lot of supplies from other countries. So if we are going to put tariffs on those other countries, please know that that is going to increase the price for renovation as well as new building. And then immigration. So if we're stopping people from crossing, I want all the people who want to work and like put their heads down and make stuff happen and build houses for us. I want all of them to cross the border, right? I just don't want the terrorists to cross the border. But unfortunately, I don't think they're going to be able to pick and choose between those folks. So that's going to cause prices to probably go up. And then we have we're stuck at about 3% inflation. So we'll see where that goes. So that is the overview of the market. Oh, I keep pushing the wrong button. That's the overview of the market drivers. And if you look at the 2025 forecast for the housing market, I feel like we're at the bottom of the cycle. I feel like we've been at the bottom of the cycle for a while now. We invested through 2008, 9, 10, and 11, and it felt like a flat that never ended. Hopefully, we'll be able to get out of this flat in the housing market by mid or end of 2025. We're hoping interest rates will drop by at least 0.5 point. And then as soon as interest rate drops, we will start seeing some sales rebounds. But even if they don't drop, our sales will be up probably in about that 2% range just because of in-migration. Prices seem to be up about 2% year over year, and I think we're going to continue to see that as well. And guys, this is the real estate investor blueprint that I've got right here. So Phil's going to do another presentation, and after he does that presentation, I'm going to meet you guys who signed up for the VIP, the $100 REIA membership, just right outside the door, and I'm going to give you your own copy of our real estate investor blueprint. So
and do a little orientation,
and do a little bit of an orientation to tell you what to expect. Go over some of the items on here and tell you what to do as you're in preparation for our 3-day workshop.
All right. Well, thank you, Shano. Appreciate it.